Welcome back to Business Week on Arise News. I'm joined now from our Lagos studio by Oladele, CFA founder and CEO of Oladele.com to review some of these stories in more detail. Thanks for joining us on the show today.
Thank you, Rolake, for having me.
So the first story, which made quite a lot of noise and caused a bit of anxiety during the week, was this story that had initially been interpreted as the finance minister, Wale Edun, wanting to use pension funds. Tell us how that happened and where the mix-up was and why it caused so much consternation amongst Nigerians.
So there was a news earlier in the week that the federal government was going to take some of the pension funds to deploy into infrastructure, and it raised some sort of an outcry because people were thinking, why should they touch our money? But the central bank governor came out to explain that they were not going to do it illegally. Now, for context, whenever you invest in federal government security, federal government bond, you are actually lending to the government. And by regulation, the pension funds are required to put 60 to 70% of their assets in government securities. What does that mean? That the pension funds already have a relationship or a situation where they invest in government securities or lend to the government or fund the government. Now, what the central bank governor came out to say is we're not going to do this illegally. They have a percentage that they can allocate to infrastructure funds. We will create the proper vehicle that will be used to get those funding, and it to be deployed. And of course, with pension funds, when they invest, they have trust that follow up with those investments to make sure that they are being deployed in the right place and their funds are coming back to them. So I guess it was some sort of lack of understanding from the general populace of how things actually work, but it's not anything out of the ordinary that the central bank and the federal government plan to do.
And thank you for clarifying that, because, we've always been talking about how we need to mobilize local capital markets to invest in long-term infrastructure. And that's something that clearly the government is doing. But obviously, as you said, not doing so in a way that is not in keeping with the laws of the land. But just very quickly, still on that issue, how can we encourage pension funds in Nigeria to be more bullish about investing in alternative assets as well as infrastructure? Is it a case of relaxing regulation around this, or at least demonstrating the potential investment returns that come from these types of asset classes?
So it's a mix of two, but then you have to consider the fact that pension funds can't really go that bullish, right? But for you to make it happen, you have to change policies, you have to change regulation around their asset allocations before they can even touch it. However, currently they have maybe 5 to 10% asset allocation to infrastructure and alternative assets. But the problem is that a lot of these assets are not structured well enough for them to invest in them. They have to invest in securities as against companies directly. So you need to create a vehicle for them to invest in, and there's not much of that, right? So I would say that we have to be careful in saying that pension funds should go bullish because it's people's pension. But on the other hand, they also have those regulatory requirements that need to be looked at before they can actually go that route.
Yes, indeed. Thank you very much. So we're now going to move on to another story. Qatar Energy has gone to take stakes working alongside ExxonMobil in Egypt's offshore gas blocks. Qatar, obviously a major gas producer, exporting under long-term contract arrangements to the Far East, to China. So tell us what this all means for both Egypt and maybe interpret Qatar's actions here.
So I would say for Egypt, it's one of the interesting news coming out of Egypt. They had previously signed an agreement to sell a massive portion of land to the UAE and get some funding for it. I think earlier this week they got like the second tranche of about $14 billion to help their reserves, and they got to sign off. Got some deposits that the UAE had put in their central bank written off. So I say that Egypt as a country, they are using their relationships very well, I dare say, and the truth is, if they have struggled in drawing value from these things, and you can find someone who, with a good contract, will develop the gas blocks and give you your percentage, I do not think it's a bad deal for them. I think it will strengthen their currency better. It will give them some economic stability with which they can actually move their people into actual economic prosperity. So it's good for them. Of course, for Qatar Energy and for ExxonMobil, it's also a good deal. Well, because I mean, you're getting assets, you are growing, there's a market for it. So everybody is happy in this conversation.
Yes, indeed. And it's worth noting that Egypt has been going through quite a lot in terms of its macroeconomic challenges with high inflation, north of 40, high interest rates and currency devaluation for the Egyptian pound. So this is good news for the country, certainly in the long term. Now, let's move back to a domestic story here in Nigeria. The IMF said it is concerned with Nigeria's plans for a domestic dollar bond. And, you know, Ola, when I look at the story, well, the first question to ask you, what could be so bad about issuing a domestic dollar bond? One might argue these are risk-free bonds being issued by a sovereign entity, and it's a good way to raise liquidity for the government. So tell us why the IMF is so concerned about this.
So the concern is quite valid. You would say it's risk-free because it's not a Naira security. The fact is that once you are borrowing out of your local currency that your central bank can print, you are taking on higher risk. It's not the same risk as a local NGN savings bond. But the point for the IMF is this. You already have interest rates high, inflation is high, and in trying to battle inflation, you've taken interest rates up. There's an interest expense line item that is associated with these decisions. Now you want to bring in a dollar-denominated security. And of course, it can't be the same requirements as a regular Euro bond, which the minimum entry point is $200,000. Now, for you to do this and to make it easy for everyone to access, the minimum entry point must be low. For you to also bring it and for people to access it, the interest rates must be attractive. If, as an individual in Naira, I have been looking at the way the currency has been sliding, and someone offers me $1,000 investment at 8%, 10%, I might opt for it instead of going to the Naira bond, savings bond at 18%. Now, what happens is that for you to keep your Naira bonds attractive while still doing the dollar bonds, you're going to have to take it up way, way higher than it is right now, so that the comparison is so significant that people say, let me stay with Naira. So that interest expense, we already have a debt servicing to revenue ratio problem, is going to be heightened. So the question is, what you're going to get from actually doing this domestic dollar bond, is it going to be worth the interest expense or the possible movement or incentive for more people to buy more dollar and put more pressure on the currency? Those are the things that the IMF is concerned about.
Yes, and very good the way you've actually outlined the IMF's rationale for saying that. You make an earlier point around the fact that, you know, Naira savings, Naira bonds have a higher risk-free rating than dollar bonds. But do you perhaps see that in a different light if you consider the fact that the country does earn dollar revenues from oil exports, notwithstanding the fact that oil exports have been challenged in recent times? Could that provide a bit of reassurance, at least on the end of the investors in such a local dollar bond?
I would say no. Why? Because we are not even meeting our budget targets in terms of oil production. Right, that's one. And then the current dollar revenue that we have is already under duress. So taking on more obligations in dollar terms is going to increase that duress if we do not actually create ways where new pathways actually to earn dollars in the country. So the current oil situation is not a sure banker. It's not a reassuring fact when you're doing something new.
Yeah, thank you very much, Ola. I mean, we'll be watching that story very closely, and it'll be good to see what the structure of such an issue will look like, at least on the government side. Let's move now to another domestic policy issue. The Presidential Tax Committee is seeking to exempt 95% of the informal sector from taxes. Now, first of all, I have two questions here. The first one is, we talk informal and we talk taxes. The question is, if you're excluding them from 95% tax, the assumption is that they're paying tax in the first place. So can you help us understand what the engagement around tax collection in the informal sector is like? And then if you're doing a 95% target, you know, how would you foot the cost of such a concession?
Now, based on the reports that came out, they are categorizing companies or businesses that earn less than 25 million not to pay taxes, right? That's their target. But we all know that yes, they don't pay taxes, like they don't pay VAT, and they're excluded from that. But the reality is that they pay a lot of taxes. If you consider a market woman and her contributions to the security infrastructure, if I dare call it that, within the market, or the social infrastructure within the market that she has to contribute 100 naira to every day, that is tax. Such that when we say they should not be exempted from taxes, the question is, are you saying that they do not cough out anything at all to the society, to the community, to the local government? I don't think that is the case. Such that I'm not sure how it's going to work, also in terms of funding, and then who are you going to put the burden of these people, which I dare say will be a larger number of adults in Nigeria than the small businesses take up a larger percentage, such that how are we going to fund that, right? We probably will need to look at that more critically. I'm not sure how it's going to be funded based on our current economic situation.
Yes, indeed, Lola. We always say the devil is in the detail, but the point must also be made that micro SMEs and SMEs do contribute quite a lot to the Nigerian economy. So anything that helps them position better for growth and expansion is always welcome. But we'll wait to see what the details of such a tax exemption structure will look like. Now, moving on to another fiscal issue, if you like, Biden has slammed, and when I say slammed, literally slammed, 100% tariff on Chinese-made EVs. He's been threatening this for a while, but help us understand a bit more around the rationale for making this move.
So the U.S. government, the president announced that they had moved taxes from 25% to 100% on EVs, medical supplies, and chips. And they were citing economic security of the U.S. state, the U.S. nation. And basically what they were saying was China is pushing out very cheap products, and it's not allowing their businesses, their companies to thrive. And so their incentive or their solution is to take up taxes such that, and the value of that ecosystem or economy is about 18 billion, such that if you're bringing in 18 billion worth of goods from China in those categories, you are going to be paying an additional 18 billion in taxes. Now, they are trying to defend the economy, which is valid, and economic security is always a thing. So I applaud the US government for defending their citizens and defending their businesses. However, if China is bringing in cheap products and products can actually be cheaper, could it be that you are making your own people spend more than they should? But that has always been the bane of the China-US trade war, and we would see, because the US government is saying is sort of brushing off how China would retaliate on this. But we all have to watch and see how it will pan out.
Yes, interesting points, Ola. And I have an observation around this tariffs. I don't know if this has been observed by others, but the tariffs happen to be on equipment, goods, and machinery that is related to renewable energy. So we're talking lithium batteries, solar panels, EVs, things that have to do with the energy transition. So curiously, I don't know whether the US government has thought through the category of items that are being imported here and how they fit into the energy transition debate. I wondered whether you had any thoughts around what the relevance of that may be.
So I think that America is trying to defend their borders. They're trying to ensure that their own local companies can produce profitably and transition. So they want to make sure they are part of that transition into green energy. So if China comes in, right, with their pricing, then their people are thrown out of the market. So what they are doing, it sounds counterintuitive, but they are still trying to make sure that they are part of that move in a significant way.
Thank you. And in fact, economic nationalism is a feature not just of the US government, but also the Chinese government. But we'll be watching that story very closely. Thank you for your fabulous insights, Oladele, founder of Oladele.com. Thanks for joining us on the show.